So clearly the Fed did not meet where the market is for next year, and so it's a disappointment. And I think eventually we'll get to that one hike next year, but it's going to be very slow on an institutional basis. The Fed projects first and then acts. It's a nervous market. You've got people doing tax loss selling right now. So you have a selling bias going into this, particularly because pretty much every buy since October 1 was a bad buy. You have people selling for tax reasons, and I think it's just going to be a tough market till the end of the year.
Yeah. David, when we take a look at market reactions, no surprise. I mean, Rick was highlighting the yield curve flattening that we're seeing, so we've seen financials come off. What we have seen, though, is small caps hold on to their intraday session gains. They're still up 1%, and this is a group that people are really concerned about being levered or having the biggest percent of leverage in terms of risky and with floating rates.
Well, first of all, the economy is not going to get hurt by a federal funds rate between 2.25% and 2.5%, and it won't get hurt by one at 2.8% either. So there isn't really an economic threat here. Also, I think the market may be misreading this one a little bit. Remember, the Fed governors and bank presidents have to put in their forecast beforehand in order to put together this dot plot. This is not a decision that we're going to put these numbers on the page, at 2 o'clock in the afternoon. So I think what we'll see in the press conference is I think Jay Powell will look at this reaction and realize he needs to put a little bit more soothing, a little bit more dovish language in there. And an easy way to do that is to say, okay, so we're going to do 2 rate hikes here. Is that going to be March and June? So I'm hoping
if he cares about the market's reaction, he might just say,
but I think he does. I mean, if you saw the way that he changed his language about neutral and the range to neutral and a few months over the last few months, he cares. So I hope Steve Leisman's first question is, okay, so 2 rate hikes, is that March and June? Because I want to give Jay Powell an opportunity to say, no, we could wait a whole long time. We might not do it at all.